Ripple's XRP has been facing sharp selling pressure in the latest trading session, slipping back below the key psychological $3 mark. On Friday, August 29, 2025, the coin dipped to roughly $2.80, down about 4 to 5% on the day. This decline comes amid broadly risk-off sentiment in crypto, as investors step back from volatile assets ahead of the U.S. Federal Reserve's upcoming policy decision. In practical terms, XRP's slide reflects a pullback in speculative enthusiasm. Retail traders are cautious, and even the bulls that drove gains earlier in the summer are on the defensive. In fact, analysts warn that if buyers cannot quickly reclaim the $3 level, XRP may enter September on weaker footing. Technical signals are already leaning bearish, pointing to a possible extension of the correction toward near-term supports, around $2.50, $2.76. Unless sentiment shifts by midweek, behind the price action lies a clear deterioration in the underlying fundamentals. On-chain metrics show that network activity has plunged sharply in recent weeks. According to CryptoQuant data, the number of active XRP ledger addresses, essentially wallets sending or receiving the token, has fallen from roughly 50,000 in mid-July down to about 24,000 today. This more than 50% collapse in active addresses signals that many investors are stepping out of the market, eroding the retail base of demand. Lower on-chain activity usually corresponds to weaker speculative interest. As the report explains, a fall in active addresses indicates a reduction in risk appetite as investors take a step back, leaving XRP susceptible to supply shocks. In other words, with fewer participants transacting, XRP's price is more vulnerable to imbalances between sellers and buyers. The futures market data reinforce this bearish view. CoinGlass reports that open interest in XRP futures, the total value of outstanding contracts, has declined markedly from around $10.94 billion a few weeks ago down to about $7.97 billion now. A drop of roughly 27% in open interest suggests that traders are cutting positions or hesitating to add new bets on XRP when fewer longs or shorts are open. It usually means confidence in the current price trend is waning. As the FX Street analysis notes, lower open interest in XRP futures implies a lack of conviction in the token's ability to recover or sustain an uptrend, which in turn raises the odds that the downtrend could continue. At the same time, liquidations of leveraged bets have spiked. Over the last 24 hours, more than $15 million of long positions were liquidated on XRP, compared to only about $1 million in shorts. This lopsided busting of longs underscores how defensive traders have become. A sudden price dip wiped out many leveraged buyers, reflecting a risk-off mood across the market. These fundamental strains are mirrored by key technical signals. XRP is trading below not only the $3 mark but also the descending 50-day exponential moving average, confirming a shift from the bullish pattern seen in July toward a more bearish structure as September arrives. In fact, the analysis observes that XRP price is trading below two key levels, the pivotal $3 and the 50-day EMA, signaling a shift in sentiment from bullish in July to bearish heading into September. Part of that is seasonal. Historically, September has been one of the weakest months for cryptocurrencies. Data from Bitcoin, often a bellwether for altcoins, show an average return of about minus 4.9% in September, making it one of the worst months of the year on average. Such seasonal headwinds have already started to weigh on traders. Momentum in XRP. Momentum indicators reflect the growing bear case. The MACD moving average convergence divergence has already flashed a new sell signal, which typically encourages chart-focused traders to lighten up or sit on the sidelines. Meanwhile, the RSI Relative Strength Index has plunged below 50 into neutral to bearish territory. At the time of writing, the RSI is around 40 and still falling. An RSI slipping deeper toward oversold levels below 30 would usually mean that selling pressure is strong. In this context, as the FX Street report notes, if the RSI continues its descent, the path of least resistance could remain downward. Immediate support levels are now in focus. Technical analysts point out that the 100-day EMA at roughly $2.76 could act as the first line of defense against the sell-off. If XRP finds buying interest there, it might stabilize. Below that, the 200-day EMA around $2.49 is the next major support zone, a longer-term trend indicator that, if breached, could signal deeper trouble. Put simply, the stronger supports lie near $2.50. And a sustained break below this area could open the door to even lower levels. On balance, the confluence of weaker on-chain metrics, falling derivatives interest, and negative technical trends has created downward pressure that could keep XRP underperforming in the near term. Many traders have taken profits from the rally earlier in the summer, or fled altcoins altogether amid concerns about the Fed, inflation, and broader market volatility. Unless fresh bullish catalysts emerge quickly, the chart on many timeframes suggests the correction may not be over. Some analysts are already cautioning that XRP could test the low $2.50 region again if the bears retain control. However, it would be one-sided to overlook the counterarguments. Even in this weak environment, there are technical and fundamental scenarios that could spark a reversal. First, despite the downbeat outlook, the market has been oversold on short-term charts. The FX Street analysis explicitly notes that a short-term bounce or knee-jerk rebound is possible, especially after the recent broad sell-off across crypto. If on Monday, September 1st, XRP manages to reclaim the $3 pivot and hold it, it could lure back some retail buyers who see $3 as a key psychological floor. This level has held up during the slide, so a convincing breakback above it, ideally on higher volume, might restore bullish momentum. In that case, XRP could even entertain a retest of the all-time high near $3.66 once again. Indeed, some technical analysts argue there are bullish patterns forming that could ignite a rally if triggers appear. For example, observers have noted that XRP's chart is taking the shape of a narrowing pennant or wedge, a consolidation pattern that often precedes a sharp move. One such analysis, CoinCentral, August 29th, points out that if XRP breaks decisively above the short-term resistance at about $3.10, it could target higher zones around $3.37 or even $3.60. In a stronger scenario, continued upward momentum might push past $4. These targets are not outlandish if you assume a rebound. The same source cites the technical momentum indicators, like the Directional Movement Index, DMI, which is tilting toward bullishness with the positive line above the negative. In plain terms, momentum tools have not fully turned bearish. And in fact, DMI shows growing positive strength, favoring upward momentum. Furthermore, bullish parabolic SAR dots below price suggest an upside bias is still possible at a broader timescale. Beyond chart patterns, any fundamental or news-driven catalyst could change the mood. The market is currently focused on a couple of big themes. One is the macroeconomic backdrop. If the Federal Reserve were to signal a dovish shift, for example, slowing the pace of rate hikes, risk assets, including crypto, often get a short-term boost. A dovish surprise might lift sentiment overall and drag XRP upward with other majors. Another theme is the ongoing legal regulatory saga for Ripple and XRP, while the famous SEC versus Ripple case has been mostly resolved. Any additional clarity or favorable developments could reignite confidence in XRP. Investors could interpret as further regulatory certainty as reducing future risk. Similarly, broader crypto events, such as approval of spot XRP ETFs by the SEC, are on the horizon. Although nothing is guaranteed, many bullish analysts believe that if even one high-profile ETF is greenlit as speculated by industry insiders, it would open the door to large inflows from institutions and retail alike. Indeed, even amid today's bearishness, there are reports of sizable institutional interest in XRP, for instance. Some commentary has pointed out that XRP has attracted record open interest on regulated platforms like a $9+ billion peak on CME futures in mid-2025 and that dozens of firms have filed for XRP ETFs. If one takes the optimistic view, these developments could set up a scenario where once the dust settles, buyers step in. People like Dom Kwok, co-founder of Easy, note that should an XRP spot ETF be approved, it would open XRP to millions of new investors, potentially fueling a strong uptrend. The argument is that XRP, being relatively cheap per token compared to BTC ETH, could see significant mainstream retail demand if regulated investment vehicles make it easy to buy. Of course, this bullish case depends on those conditions materializing. For now, key resistance must give way. CoinCentral points to the $3.10, $3.40 zone as a critical battleground. If XRP can break above roughly $3.10 and turn it into support, the technical targets rise toward $3.37 and $3.60. Traders will be watching whether the recent support region $2.85, $2.95 can hold through September. Some forecasts suggest that as long as XRP stays above $2.80, $2.85 range that the ETF strategists and chartists have pointed out as a short-term floor, a mid-September rally back toward $3.40, $3.60 could play out, even if the negative trend persists. There is an opportunity side. Every dip builds potential demand. Lower prices simply mean a lower risk threshold for buyers. If large holders, whales or institutions see this pullback as overdone, they may accumulate. In fact, the Economic Times, August 31st, notes that historically, drastic declines often attract contrarian buying at technical supports, and whispers of a surge toward the old peak $3.66 or beyond are not uncommon among more optimistic analysts. That same article reminds readers that if XRP holds around $3 and convincingly flips it back into support, the rebound could be sharp. Sometimes a rebound of 10 to 20% can happen fast in crypto when sentiment swings. In summary, the near-term outlook for XRP is conflicted. The bears currently have the upper hand. On-chain usage is down. Derivatives positioning has lightened, and all the trend lines are red. These factors have dragged XRP into the red zone, with technical tools warning of further losses. On the other hand, crypto markets are notoriously fickle and sometimes overshoot. Should any positive news emerge, like a softer Fed tone, or a regulatory green light, or if key levels hold, XRP could snap back quicker than expected. Traders and investors should therefore monitor both scenarios carefully. The risk is that XRP retests to $0.50, or even the mid-$2.40 south if selling intensifies. But there is also a chance that bargain hunters or renewed ETF optimism turn the tide toward $3.403.60 over the next few weeks. Looking at both sides, the picture is clear. Until some consensus forms around either scenario, XRP is likely to trade in a wide, volatile range. In practice, this means keeping an eye on the charts, especially $2.76 and $2.49 EMAs, the critical $3.10 resistance mentioned above. It also means watching the news flow. The Fed's decision and any crypto regulation updates could swing the market's mood. For now, the immediate trend favors the downside, with the sellers enjoying momentum. But crypto markets are famous for rapid reversals, so even a small uptick in retail demand or a hit of bullish news could turn those red numbers green. In short, XRP faces a classic tug-of-war. Bears are eyeing a further slide given weak fundamentals in a risk-averse climate, but the bull case is that these conditions may be temporary. As one recent technical note summed up, a reversal above $3 could restore retail interest in XRP and reinforce the bullish grip. Conversely, failure to defend current supports could leave prices on a slippery slope toward $2.50 or lower. This duality, significant risk, but with tangible upside, if certain triggers occur, typifies a market at a crossroads. Traders and holders must weigh both possibilities: the continued correction or even a new leg down versus the potential for a rebound-led rally. By staying aware of actual data, on-chain metrics, open interest, Fed cues, and chart patterns, and using prudent risk management, participants can navigate this uncertain period. Only time will tell which side of the ledger will dominate XRP's path through early September.